Welcome, welcome everyone. How we doing? How we doing? Yeah, never listen to that Shane guy, man. You learned nothing today. Just learned that you're never gonna listen to Shane. Yeah, definitely not telling the truth. I'm gonna be real with you. Uh, I care about you guys way too much to ever do something like alert SPX to you guys. Like I'm so opposed to that in every way. I definitely ain't wax. Yeah, but never trust Shane. Like I said, never trust a guy who's got a picture of himself taking a picture of himself in a mirror shirtless, you know? Frank, how we doing? You showed up to VC right as I was leaving today, I saw. I wished I woke up late. We've just been getting all these like basically every day, like sell days or buy days. We've just been getting those nice reversals like an hour and a half, 2 hours into the day though. Yeah, Frank, I've been meaning to talk to you. I'll probably shoot you a DM or something. We gotta do a couple of tweaks. Oh yeah, for peanut. Dude, I saw you say something. I saw you say something funny this morning. I don't remember what it was. But yeah. This thing was cruel. If you weren't on the right side of this today at the right time today, whew, it was on me. I've just been trading at WM. We got that VIX over 20. You know, those SPY contracts are too expensive. SPX contracts are too expensive. You know, it's a more advanced thing to think about. But like when the VIX is high, you're instantly messing up your risk reward trading SPY or QQQ. You know, like the big advantage to those kinds of things on same days is the very cheap price of the contracts. That's when they benefit you the most. When you got to hit a $200 same day, you know, when you're trading those same days and you're scalping same days or day trading same days or whatever it is, you really should be scalping them. It's all about percent gain. You know, like you want to be able to have a decent enough position you can be trimming and all of that. And when those contracts are 200, $250, there ain't no point. So I've been trading at WM, you know, it's got the 60, $70 contracts, been putting in plenty of $1 moves, a bit friendlier than SPY. So I've been hitting IWM. When VIX heads back down, I think it might have one more pop in it. I mean, as long as we stay over this 20 to, and of course, that's not technical analysis on VIX. Those are just the areas where you see dramatic shifts in price. Um, but watch this 20 area. We start selling under there, and you know, some of the selling pressure should disappear. But we're lucky because we know with VIX at 20, you know, most people don't really understand VIX, but basically what it's telling us is just that the market is pricing in bigger moves. So when we have a VIX over 20, the market is expecting SPY to be moving those, you know, three, four, $5 every day. That's what's being priced in. So it makes those moves often, you know. Those market makers, they're smart. They ain't wrong often. They know how to price things. Welcome, welcome everybody. We'll get a few more minutes here. So, yeah, I'll tell you what, for you SPXers, Lambos, rough day for it. Unless your entry was on point, you were not having a happy day on any sort of out the money SPX today, that's for sure. But IWM is also nice because it's got so much shit in it that you know, you don't have to like pay as much attention to the rest of the market when you trade IWM. You know, that thing trades pretty dang technical most of the time, so it's nice, it's easy. It's like beginner spy and QQQ, so it's fun. Piece of cake to trade. Much less risk too. Husky, how we doing? Doing good, doing good. We had a nice little morning. I think I took like one trade midday. Nothing I really liked. And then I did hit some Apple puts, fumbled those things, but man, good day. Nah, Avenger, I think I don't know, off the top of my head, like over 1,000 miles from LA. So we got some coming next week. We were supposed to have some, but no, you guys are getting walloped down there. My buddy said they got like, I don't know, 5 feet of snow in Mammoth, 4 feet of snow in Mammoth, something like that. You guys are getting smoked. I shorted this bounce on Apple. I sold it like right here, unfortunately. But yeah, phew, I know a thing or two about that. Yeah, I bet Mammoth is insane right now. I never got to go. I almost got to go once when I was a kid, but I messed that all up. Okay, give me one more second. Let me get a post up here. Okay, let's get this going. Welcome, welcome everybody. Dirty River, happy to have you here. Tonight we're gonna First part, we're going to be finishing up a couple things on ranges. I actually, funny enough, well, we've had pretty low attendance in lectures of late, but people really liked the range lecture. I got to be honest, shocked by that. Generally, people hate trading ranges, but I think that it was just kind of eye-opening for a lot of people. So I actually got a few DMs just because. I think we got cut short. I'll just be entirely honest with you. I don't remember what happened, but when I looked at my notes, it says we got cut off. And I got two things that I wanted to talk about still. So we're going to cover those first. It's just a couple, at least in my notes, I say that I went over the opening range, the Al Brooks opening range, and I say that I went over the kind of first hourly range. I won't say I made it up, but I am the only person I've seen talk about it. But we're going to talk on that a little bit, and then we're going to discuss one more little thing. That's kind of a segue into the second part of this. And so the second part of this is we're going to be talking trending, trading trending markets. How can we identify them? How can we trade them properly? Funny enough, you guys know me. Most of you know me and have traded with me quite a bit. You know that just like straight uptrend and downtrend days are my least favorite days. They don't offer good opportunities. I'm not a chaser, so I'm never really going to, take great advantage of big trend days. I like to catch little chunks of the trend. That's what I'm more into. So we're going to talk about how I like to trade trends, how ranges play into trends, and some ways to really capitalize on it. And obviously, trends are, I won't say easy to identify, but that's what we're going to kind of focus on tonight is how do I know we're setting up for a trend? And so this lecture is going to teeter a little bit on price action, and just some things that I like to look for and things that I like to take note of in regards to trends to kind of help me say, okay, this looks like a trend is developing. So, you guys know that, I mean, if we're double topping, I'm shorting it. We're double bottoming, I'm longing it. I have these things that I like to do. But you guys have all heard me say, like, hey, this is a double top, but I'm not taking it this time. those are oftentimes because I feel some sort of trend is about to form. So again, with that, we're going to get started on a little bit of the range stuff, some of the stuff we didn't quite finish up on, and a little brush up on one of the other ones. And so range trading, we talked a lot about it. Why I love it, why it's easy. It's typically low risk, higher reward, blah, blah, blah. We like all of that. But again, identification is always kind of the big, it's the big thing to help you in specifically in your day trading. I can't even necessarily just day trading, just in your trading. It's important to be able to identify ranges or trends. And so one of the ones that I was teaching, I guess I should just turn off all my indicators. There's no point in them tonight. Uh, one of the ones that I like to teach, and so again, you guys probably remember this last time saying if you're on Thinkorswim, I'm sure most of the other big brokerages as well, some of the more retail friendly ones, your Weebles and your Robinhoods might be a little bit different. But I love this range because it's easy to identify and you have it 30 minutes into the day. So what I do to identify this, and I guess maybe we'll go to SPY, why not? What I do to identify this is and on Thinkorswim, again, it's a piece of cake. I want to identify the first hourly candle of the day. And the reason I say some brokerages will be different is the hourly candles on Thinkorswim, they close when the hour changes. Obviously, to me, that makes a lot more sense. Some brokerages, Webull, and I believe TradingView, maybe I'm wrong on TradingView, they close their hourly candles on the half hour. I guess maybe the argument is because the market opens at 9:30, so they base it on a market opening time. But what we want is we want a box and we want it drawn around the highest high and the lowest low from 30 minutes before market open to 30 minutes till after market opens. So on Thinkorswim, that's what we get from this first hourly candle. It's going from on West Coast time, 9 o'clock Eastern time to 10 o'clock Eastern time. So, like I said, 30 minutes before market opens, 30 minutes after market opens. It can be a very, very powerful range. And you've identified it 30 minutes into the day. So that's the one that I really, really want you all to take home from this if you can. And you can see, we'll get some wicks outside of it, but we want to identify this early in the day as the range. If we get outside of ranges, that's when we start looking for breakouts. We get below ranges, we start looking for those breakdowns. But we always want to be able to identify those ranges early. And then we know in our range trading logic, we obviously start on the long time frames of the day. We know the market is ranging. The market has been ranging for, the better part of 3 months now, pushing 4 months now, however long it is. The market has been ranging. So not to say it's untradeable. We've obviously had some very big volatile moves, but we always want to assume range. You want to assume a range is going to form. Statistically speaking, 65% of the market spends its time, intraday in a range of some sort. So we want to identify these early. And then with our range trading logic, we know up here at these highs, we always want to be looking short at these highs. Down here at these lows, we always want to be looking long at these lows, unless we start getting some, things that we identify as trends forming. So we always want, we want to identify this early. That's some of the most common questions that I get. How do we know it's a trend early? How do we know it's a range early? Yeah, honestly, Raphael, yeah. And that's how I always think about it. This is going to be, I mean, whatever, we can talk about whatever we want. So this is a little bit more advanced, but so you're exactly right. When the big picture, the market is ranging, I'm going to be looking for that range movement intraday, especially when it's been going on for months and, pops aren't holding and dumps aren't holding. So we want to kind of, take from that big picture to the smaller picture and, know places where we want to be short or where we want to be long. And so, SPY is a wonderful example. If we're trading up here, your 694s to your 697s, I'm really going to be looking for double tops intraday because when we're at the tops of ranges, that's when double tops really play out. When we're trading down here, our 675s to our 680s, you guys remember I was talking about this in this class last week. We were talking about it in class 2 weeks ago, whenever that was, that we want to be long down here. And so when we're trading at the lows of these ranges, we want to be looking more for double bottoms to be holding and double tops to actually be breaking. So we use the big picture of the market to tell us that. And so obviously, as we've been trading down here near these lows, we want to start to look for double bottom bounces, or we want to look for three push wedges, those kinds of things into bounce points, that's what we want to look for when we're at the lows of these ranges. Obviously, we can get ourselves caught up in a tighter range day or a nice bounce reversal day. There's a lot of opportunity, but when we're low, I start to kind of say, okay, I'm looking for bounces more than I'm looking for shorts. And then when I'm up at the highs, I'm looking for shorts more than I'm looking for bounces. I will say with SPY, kind of in the middle of the range when we're in the middle of, when we're in the middle of, I don't know. I mean, I'm just going to check a random range on here, but when we're towards the middle of this range, I'll look for double tops and double bottoms because they can both work. The middle of ranges is always a tricky point in the market. It's oftentimes, or big picture ranges, it's oftentimes where you will wind up with a day like we had today. Some very nice sells, some very nice bounces, but as a whole, we didn't really go, much anywhere. Like what we opened 683.80, we closed 684.50. We didn't really do much today. And that's what you can kind of expect in the middle of these ranges. Obviously, when we get above them, we can rip. When we get below them, we can dump. But we want to look for some battle amongst each sides. And so then that's, our big picture. So to get back to where we are, this is for me, and again, it's unfortunate because like Al Brooks and all of those people, they do massive study. He has, 40 years of in the market, and then he's back tested a lot of his ideas, his hour and a half opening range. The one I teach about all the time. He's got like 100 years of market data on that to know the statistics of it. This one, the 30 minutes before and 30 minutes after, I did this because I know a little bit about how markets work. I'm not going to say I'm like amazing at how market internal workings of markets, but I know that liquidity starts to be built, market makers start to get involved about a half hour before. I mean, obviously even before that, but a half hour before market open, they're starting to get those orders ready. Then we know when market opens, we get what's known as MOO orders, market on open. It's similar to an MOC at the close, but it's at the open. We know a lot of volatility and a lot of liquidity is going to be produced in that hour range. And so for me, I want to know where does that, volatility and liquidity kind of stop, up and downside. And so when we get to look at that first hour of the day, not only do we have a potentially well-defined range 30 minutes into our actual ability being able to trade, but we have you know, a very tradable thing. Again, I can't back it up with statistics and tell you, how frequently this range will hold, things like that. But I still use the same market statistics that I always teach. Most breakouts fail, all of those kinds of things you guys hear me yap about all the time. They're for range trading. And this is a very, very easy range to draw and understand. So let's see. Oh, yes. So I didn't see the second part of your question. So yes, and exactly. And you like, I don't want to say that I don't like people thinking that I'm always trying to short the top or buy the bottom. I just think of everything as a range. And so when I start pushing up to tops of ranges, I start seeing some big candles. I start seeing three push wedges form. I mean, I just look short. I just look short. And ultimately it worked out pretty nice for us. You can see we're well outside of this first hour of the day range. Oh, I mean, yeah, you can see we're well outside of this first hour of the day range. But weak. Anytime we're over it, we're weak, and so we just kind of look for it. How does it play in 930 to 11? It's just a different range. That's the one that I talked about. Those are on my levels every single day. That's actually a trade. I mean, I use that one every day. I obviously have the indicator that I think it's on this one. Loads it up for me. So Apple today, you guys can see, I mean, obviously, I always trade the same thing. I always assume ranges are ranges. This is actually going to be a nice lead into our next thing. I always assume ranges are ranges, and when ranges break, that's when we look to short bounces. So that's what I did on Apple today. This blue line right here is that 930 to 11 range, the Al Brooks opening range that I talk about all the time. And it just provides a really nice, low risk, high reward trade. I knew I could short it here. I knew if we popped up over here, I was going to be stopped out. So I had like, what, 25 cents a risk or something for a potential buckish down. I'll take that trade all day, every day because, ranges are awesome and they are strong. And when they break, which this next little range, this idea that I'm going to try to teach you about here, if I can find an example, is what leads into trends. Obviously, the second part of our lecture. So the next thing that we're going to talk about is this is again an Al Brooks idea. I'm going to simplify it. It's definitely some pretty advanced, price action stuff, but he discusses something, and for anybody who studied him, he discusses this thing called breakout mode. And what is breakout mode? It's a way to, kind of use the market to identify if there is going to be a breakout or if there is going to be a breakout and some things that we like to look for. And so my rule of thumb is I basically look for about the first 10 or so candles of the day. So this isn't going to be a range that you draw. It is ultimately going to be a range that you can trade, but it's more about what the candles are doing. And so actually, as I'm looking at Apple, it's a pretty sweet little breakout mode setup. So what we're looking for is basically, and when we discuss the opening range and why it's an hour and a half, that's because we know we have a give or take 90% chance that high or low of day has been set. We, of course, don't know if it's high or low of day. We could be down at the bottom and the highs could be set. We could be up at the top and the lows could be set. We just know that statistically speaking, one of our major highs or lows has been set. So what we want to look for is we want to look for, and we're just going to use Apple here today, and it can, of course, work to the downside as well. We're going to look for an attempted push up. And then we want to see a rejection back down. And then at this point, we're identifying our breakout mode. And so when this works, and of course, nothing in trading is 100%, when this works, you are oftentimes presented with a trend. So, what we want to look for is our first push up, our second push down, and then the market is going to do one of two things at this point. If it's a range, which it is early, we're going to look for that push up. If it starts rejecting up here, you can see it's a double top. There's a reason I love these patterns. Statistically speaking, to get a scalp on a double top or double bottom or triple top or triple bottom, triple, double bottom, whatever it is, statistically speaking, for a scalp, you're talking 80 to 90% success rate. Of course, the scalp might not necessarily be big enough for you to make money, but you have good money, but you have an 80 to 90% chance of a scalp that can pay you. So the other side of it is if a reversal is going to come, it is oftentimes going to be at a double top or a double bottom. So you have very high odds of that paying you, at least for a scalp. And you also have very high odds of finding yourself in the reversal. However, in something like breakout mode, where we've kind of set our lows, we've set our highs, and we've pulled back down, now we have to sit and wait. You might get your answer in a couple candles, or like today, you might get your answer a few candles later. You want to see where you've identified the highs and lows. You want to see that come into play. So that's what we have here. And again, this is pretty advanced price action. It can be applied to all charts, doesn't matter what it is. We get our push up, we get our push down. Now we say, okay, is the market going to reverse back up or is the market going to continue downwards movement? So we get our push up, we get our push down, and then of course, I like to short the double top if I can. However, when we start to look for some sort of breakout mode, that is when we don't, if we short the double top and we have the best possible entry, great. However, we don't necessarily have to short that. We can wait for the next bounce because we are provided something very awesome. Here's our stop loss. Now we wait for the next bounce to short. You can short this candle, you can short this candle. Neither of those matter. Which one you take doesn't matter. We look for the bounce to short and our stops are over the highs. So we have a very defined risk here. And then the most important part, you guys hear me talk about them in voice chat all the time. We are setting a lower high. That's what's important to me. Sellers have showed up where we expect them to show up. We've now set a lower high in the market. For me, I am now looking for some amount of trend to occur. And this breakout mode right here is for anybody who has hit a big reversal trade with me or, a big double top trade with me, I will almost guarantee you there was some thoughts of breakout mode coming for that trade. And so we get our lower high set, and now we're looking for more of a trend. And our ultimate target is obviously going to be the low of the range. So that's our final spiel on ranges. And now we get into trading trends, unless anybody has some questions. Okay, no questions. So we've entered our trade and we've now, we're looking for some sort of breakdown situation going on here. We're setting lower highs in the market. We've got a very good entry because of it. We've double topped, we've lower high. This is what I like to call a trend reversal. We technically speaking, so with trends, there's always going to be multiple working. We definitely had an uptrend going. We were setting higher lows. This is where the market has bounced up, and is now, you could even technically say, this is a higher high from beginning of the day, and here's another higher high from beginning of the day. Now we're reversing down. Now the market is setting real lower highs. And my main thing and when people ask me about trends, you know, most of the time when we're in voice chat, we're scalping. So we have, they're fast trades. We're looking for volatile movement. Maybe we'd short this and look for VWAP. We're in and out on one candle sort of deal. Very low risk, nice high reward if it goes fast for you. When we're trend trading, you know, everybody always wants to think the market is just going to clobber. I'm short and it's working and this thing is just going to keep going. That's what everybody wants to assume. Well, that's one of the giant issues with trend trading and why I recommend it people. You should focus more on some ranged movement if you can and really capitalize on ranged movement because trading psychology wise, it is much easier to deal with and it's much more likely to happen. The market spends, as we said earlier, the market spends 65% of its life in a range intraday. So we know it's only spending, you know, 35% of its life trending. Obviously little minor trends. So we're going to talk about that in a second. Most of the time, the market is not trending. That's why it's a very interesting thing where when you're a day trader, and you're a breakout day trader, you're actually trading something that has a give or take 40% probability of actually presenting itself throughout the day. So we want to identify these trends as soon as we can and try to enter them as soon as we can because what I was saying is there's always multiple trends working. So on a day like today, as I said, we can just draw trend lines. I personally don't take a lot of trends off trend lines. I draw them on all of my charts. If I'm taking trades off of trend lines, more often than not, it's going to be daily trends. It's going to be weekly trends. It's going to be really major trends. I'm using my intraday trends more for confirmations to stay in a trade. And if we don't, if, we want to use this to, you know, make sure we are on the right side of the market. But as I said, because there is always multiple trends working, you need to be aware of that. And any trend, how I draw them, always going to draw them on a wick because we know that is where one side gave up. We're going to go to the daily in just a second to demonstrate this, but we know one side gave up, so we always want to draw them on the wicks. We got quacks in the chat. We also know people bought there before, and so we can think of this level, this wick level, later in the day. But our trends are here to tell us direction. And what is a trend? How do we draw trends? I guess I probably should have started with this, but what is a trend and how do we draw trends? A trend is as simple as a lower high or a higher low. You only need one. You'll hear a lot of people, oh, you need to have 10 touches on your trends or on your supports or resistances. I hate that logic. I want to know where volatility showed up. If my trend has two touches, my trend has two touches. And if that third trend comes or that third touch comes, I might start thinking about buying it. What we want to do is we want to look for where did the trend start changing. So right here, we're basically sideways. We view this as the bottom. And then, as I said, to draw a trend, all we need is higher low, lower low, any of those. So right here, we have a higher low. Here's our trend. We draw it. And we can see, this trend's drawn from here. We see it work sooner. We see it work sooner. We see this confirmation. A trend, people like to hate on them, whatever, who cares? A bunch of people try to say they don't work, blah, blah, blah. They do. They absolutely work. I'm not saying you're going to bottom tick things or anything like that. But even if you aren't taking trades off them, they tell you where the market is going. Like they're basically an up arrow for you. We are setting higher lows. The market is going up and to the right. That's what a trend is really telling you. So it helps with your mindset. Well, think of it as an angled support and resistance. And still think of all of our similar market statistics. We know 80% of breakout fails. So maybe we don't buy this one, but we'll buy this one because we get to say, okay, this is our beginning. Here's our second touch. Here's our third touch. I might give it a try, but as we know, market loves to move in three legs, and fourth time often not the charm. So we get our bounce up, and we don't really want to be buying this trend again. We also have a new trend developing. So as I said, here's our high. This is where our trend started shifting. When this candle bounces up, we have an official lower high. Our new trend down has begun. And so that's what we want to look for. We're going to see this candle just gave the beautiful even test of the trend. Not always going to work like that, but use this to tell you your direction. And we can say we're going up into the right. Well, now suddenly the market's kind of going down into the right. And then we keep going down and then we bounce up and EMAs, SMAs, whatever you want to use, you're likely going to have some confirmation around here, around the trend, especially on a range day where things are flat. And we want to use this trend to say, okay, we are still setting lower highs. Here's another lower high. This one, obviously you bounce back up. Maybe you get stopped out on your trend break, whatever it is. This is a point that I really want to show to people is that everybody thinks a trend is going to go forever. The issue with a trend is you never know how long it's going to go. You need to have your reasonable targets, whether it's range lows, whatever it might be, and you need to not panic yourself out of a trade or into a trade thinking it's going to be a never-ending trend or thinking that the trend is ending right away. The thing about a trend, it can be 3 candles, it can be 18 candles, it can be 30 candles. You don't know how long the trend is going to last. So you want to use the tools in your toolbox to tell you, do I stick with this trade? And so for someone like me, we catch a trend like this it's coming to my target. Anywhere down here at the low of the range, I start to have much more faith or much less faith in us selling more. We can see ultimately we bounced right around these wicks, right around where you would expect us to bounce. We did take a bounce here. So if we ride this trend down, I don't know if we shorted this candle. I don't know if we shorted this candle. I don't know if you shorted this candle. All reasonable enough. Even, all of these are reasonable entries for the short. The only thing you're doing is the longer you wait to enter a trend, the more you are reducing your potential reward. So we come down to here. Well, these bounces scare people. So one of my favorite bits of advice that I give people is if you're in a trade, it's going in your direction, and your trend is formed and you're starting to wonder, do I hold? We want to start paying attention to how are candles closing? What are these candles telling us? So this is where we're going to get a little bit more into price action. So when when the market can only do two things, it can trend and it can range. Those are the only two forms that a market can live its life in. And when those things are going on, candles have a very specific look. So I always try to encourage people to, you know, analyze the candle and don't tell me about your hanging mans or your dragonfly dojis or any of that. The guy who made all those up, Hama, rest in peace, been dead 500 years. He rolls over in his grave every single time someone tries to talk about it, like, a 3 minute or 15-minute dragonfly doji. That is not what named candles were made for. They were made for long time frame analysis in a much more difficult to access market. That's why those candles were designed and drawn that way. All we care about, and in my opinion, all we should care about as traders in regards to candles is, are they bullish or bearish and who won them? So as I said, when we have ranging going on, we have overlapping candles. We're selling down, we're bouncing back up. All of these candles are closing within the insides of the other candles. We're getting clobbered. We're ripping. We were clobbered, then we ripped. Nobody really won. This one looks bearish. What makes me say it looks bearish? You know, Strong body, closing well below its open, closing well below the midpoint of the candle. Bigger wick than I would want on the bottom, but closing near the lows. Then we get this candle. Nobody won this candle. I mean, you could make an argument that maybe the bulls won because it is a bigger wick on the bottom. That's how we want to analyze these candles. Keep it super simple. Do we have a strong candle closing well above its high, closing near its highs, bigger wick on the bottom? We should look at that as a bullish candle. Do we got a strong candle down, wick on top, closing near its lows? We should kind of view this as a bearish candle. Obviously, right to support, so we aren't going to short something like this because we're still acknowledging this is a range. Every candle's overlapping, bunch of inside candles. We aren't getting, very much answers until right here. This is where now we can analyze some trend candles. And as I said, big candle, big wick, at one point was extremely ugly, now is closing with a nice, a nice close near the highs, above the open, strong buying off the lows. These are the types of candles we start to look for bounces, trends, that kind of thing from. And ultimately, we get a nice reversal candle after a small sell. And then this very bullish candle, big wick on the bottom, nice body, strong close above the highs, or strong close at the highs. Bullish candle. We know this. Bullish trend candle. Next candle, small wick down in the body, hardly even gets a chance. Strong buy up to the highs, closing right at the high of the candle. Now we have this candle. And nice strong push up at one point. It is closing above the open. Almost no wick on the bottom, though. Only a wick on the top. I look at this candle, and if I'm long, I'm out. we can make the argument right here that this is a strong trend. But it's a strong trend that lasted a total of 15 minutes. This is very strong buying for 15 minutes, and then all of a sudden the sellers show up. Just by chance, luck of a good level right there, But the sellers show up. We should start to be worried because of this candle. Our next candle, strong sell, closes near the lows. We get a couple more inside candles, but as I said, we're setting lower highs. We're going inside. We're still looking a little rangy. We've reversed up, we've reversed down, we've reversed up, and now we're reversing back down. By that point, we should be looking for a trend. Now we start to analyze these candles and how I always teach people to manage trend trades. And ideally wind yourself up in a very nice trend is use your candles. So again, this is hindsight trading. You always get to look like the best trader ever. What I like to teach people to do for a trend. And we aren't going to be covering trimming. We aren't going to be covering all of that stuff tonight. What I like to teach people to do is, as I said, we know what trend candles are. They're ones that are all kind of closing within each other. You aren't making any move up, any move down, but we start to get bearish candles. I like to look for what I describe as a breakdown candle. And what is a breakdown candle? It's a candle that's closing below a previous low, something like that, bearish candle, bullish candle, whatever we're using bearish in this example. But so say we short this trend, we're the best traders ever. So of course we top ticket, whatever. This is a nice bearish candle. We can feel comfortable staying in this trade after a bearish candle like that. Even coming down to the EMAs, VWAP, and we close under them. I'm of course, you get a nice candle like this, you're bumping your stop above entry. Well, now we want to wait for some, another breakdown candle to adjust our stop. Obviously, I think you should be trimming. And so for me, it's this candle. So what do? We move our stop to here. They tried to buy it up. They've pushed us back down. They've closed us below that previous low. We know we have support over here, whatever. So we obviously want to be ratcheting up our stop a little bit, but our stop lives life at the top of this candle. Now we wait for a new breakdown candle to form. We had one, this is obviously bullish candle. Nobody's going to deny that, but bearish candle. Our stop's still up here. What people who trade in trends, what people who swing trade, what they need to learn to do is that when you enter, anything that happens between stopping out and taking profit is noise. It doesn't matter. We know this is where we broke down more. So if we get back over here, this is where we stop out. When we take, this candle doesn't tell us anything. It doesn't break this high. It doesn't close below the low. It just ends up basically being an inside candle. This candle as well. Nice sell, bearish candle should make us feel like we're going to get our one more push down. Still not a breakdown candle. Finally, breakdown candle right here. We break these lows. We break this little 15-minute range we had. We move our stop to here. This is where that breakdown came. So we know if we get above that, we're likely going to pop at least a little bit above there. Ultimately, this one, little bit of a breakdown candle, but an ugly enough candle for me after a strong bearish trend for 45 minutes or whatever it is, an ugly enough candle for me that my stop's likely going right here and I'm ultimately being stopped out at this trend. That is how I manage any and all trend trades always. If you're in there, let your trade work. We obviously don't do this in scalping because, if we sell our SPY put here and then we get this bounce up here and then we're finally back here, the SPY put is worth less than it was here just 20 minutes later. So when we're scalping, we would rather take the move down, short that bounce up again, and catch some more of the move. That's the ideal thing. When we're trend trading, this is what we want to look for. If you're struggling on the 5 minute, go to a longer time frame. Things start to look real different on longer time frames. Hideous wick. We know we want to short this bounce. So we can do the exact same thing. It doesn't matter time frame. It doesn't matter anything. Nice sell, breakdown candle, move our stop to here. Nice sell, but ultimately turns into not a very good candle for the bears. So that's where we ultimately ended up getting stopped out. And you can even see it more clearly why you would want to get stopped out. Because of this candle. So always use the candles. We don't care Dragonfly Doji. We don't care none of that. We want to look at this candle and say, at one point, this thing was a mega bear candle. And by the end of it, those bulls showed up. And I would argue this is a pretty bullish candle. We ultimately did take a reasonable enough bounce off it that I mean it's tradable. You got over a delta move up off of there. You have a tradable bounce off of that candle. Can you short again to catch more of the trend? Absolutely. So we've bounced back up to our previous breakdown point. So when we're trend trading, we're always looking for the same thing. We've also got our breakout mode heading us down. So we're looking for a trend. Well, how we shorted up here with our stops up here, this is going to be no different because we get to say, yeah, the market bounced, but ultimately this is a lower high. So we bought up ugly candle, not really buying this candle. We take our short and we have our stops over this high. I mean, even, over these highs. And we do the exact same thing. We get the move down. Once we get our bounce up, we have now developed a new trend. And so we do the exact same thing. We watch this trend. Obviously, you want to be trimming at support. We get a breakdown candle. So we move our stop up a little bit. Keeps going. Here's our next breakdown candle. So what do? We move our stop to the top of this candle. Obviously, for me, you guys know me, I'm not going to pretend like I would hold this. They sell us down in this double bottom at the opening range low. We know ranges want to bounce us. We have got our entire range movement. This should be everybody's target. However, if you hold, here's your next breakdown candle. Um, or even this one, I guess I didn't quite do it, but here's your next breakdown candle. You can move your stop here. You start to see these green candles. You have to ask yourself if you think opening range is going to hold. Maybe you get stopped out. Maybe you don't get stopped out. Maybe use the trend for your stop. But regardless, you catch another nice move down. You don't have to, you don't have to stop out. You don't have to keep holding. I personally like to look for a new entry, especially when you've made your whole move. But this is how I trend trade every single day. This is what I look for. I look for some sort of consolidation because this is the most important thing to learn. Without a range, a breakdown or breakout cannot come. Consolidation leads to breakouts. So we want to let consolidation happen, and then we want to let the market start showing up and saying, okay, this consolidation has happened, and we could sell from here. We should start looking short. And ultimately, I should talk about this because, maybe we short here. Like I said, our original plan, we've rejected, we've made some ugly candles, we've set a lower high. So now we're short. Well, if you're wrong, great. You stop out right up here. You now know that you have a breakout going in this direction. It doesn't, what this breakout mode method shows you is that where we want to start looking to get long, but we want to be short until we get a confirmation long. That is what we learn from this, and it gives us a wonderful entry into a trend trade. Are you gonna, be looking for trends and saying like, like that first one we drew, you're gonna be looking for that move up, and then you get the pull back down. You're gonna be looking for the move up, thinking that breakdown is coming, and your breakout's coming, and you're ultimately going to be wrong. That's why I don't do the pattern thing. I'm not going to do this kind of thing. I'm not going to buy this breakout because I still view it as a potential double top. It's the beauty of double tops. That's the beauty of ranges, and why they are, at least in my opinion, far superior to any other pattern in the market. A double top and a range or double bottom, whatever, are those things until they are not. The market, a double top is a double top until you break past that double top and you actually break out. That's what makes them superior. A range is a range until it's no longer a range. A bull flag is not a bull flag until it breaks out bullish. A head and shoulders is not a head and shoulders until it breaks down. In fact, A Head and Shoulders is a triple bottom. And there's a reason why they're a relatively unsuccessful pattern, specifically, especially short time frame ones, because you're trying to short a triple bottom. And we know statistically triple bottoms work pretty dang well. So that's really all I got on ranges. I just want to show you guys, keep it simple. Lower highs, lower lows. You can, it doesn't matter what time frame you're on, you treat them all the same. I was actually looking at one today. So this, let me zoom out. Give me a second. Uh, so here, um, big trend, big, massive trend right here. And a trend that paid huge. We're doing the same thing. We have our low, we have our double bottom. This is where trend is reversing back up. This ends up being our, our next major higher low. We can see third time, paid you. Fourth time, not the charm, but you treat them all the same. And you say, it doesn't matter what the candle is. It doesn't matter, it doesn't matter what's going on. We know at trends, we want to be looking for bounces until they break. And then when we do things like buy this, we are going to do the exact same thing. This could really benefit swing traders as well. We want to buy these lows. We get a nice breakout candle to the upside. We buy it off that trend, double bottom, whatever you got going on here. You get another nice breakout candle. You bump your stop. Obviously you're swing trading, so nothing you can do at night. Nothing really happens here. You can stick with your swing. You finally get another breakout candle. Here you go. You move your stop to there, and then ultimately I'd probably have my stop here and I'd get stopped out the next day, but you catch a $30 move. That's not going to be the norm. $20 move, whatever. That's not going to be the norm, but it doesn't matter the time frame. That's what I always try to teach to people in all of my trading is that I don't care if I'm scalping, day trading, swing trading on the 5 minute, on the hourly, daily, weekly. I analyze all charts the exact same way. So that's all I got for trend trading. You guys got any questions, any concerns? Don't like something I said? Let me know. Nothing. We got silence, huh? Well, if that's gonna do it for you guys, we can call it. We're 9 minutes early tonight. Example of a double top versus a fake double top. Well, that's the thing. A double top is a double top until it isn't. Oh, we were just looking at Apple. I can show you. So, right here on Apple, we can get rid of all this stuff that I was doing. Oops. So, right here on Apple, when we're selling down, well, okay, so funny enough, triple top on Apple. This is when we're buying up to it, this is a double top. This is a triple top. And it's one that works. Statistically speaking, they're going to work a lot of the time. So there's one working right there. Fake double top, I'm assuming you mean something that doesn't work. Well, there happens to be one on the exact same chart. So here's your double bottom. As I said, is there a scalp to be had here? Yeah, it's 30 cents. Maybe, well, okay, well, we won't get into it. This is one that would have worked, but it's 30 cents. So maybe it's not a great scalp. I'll tell you right now. Well, it breaks down. So you get stopped out. Your double bottom didn't work. One, I see you're talking about it. Is there a way to know it's just trying to blow through the stop loss? No, there's no way. But the thing about them is it is rare that you get obliterated. I'm not gonna tell you that you're always gonna if you're wrong, you're always gonna escape relatively unscathed. But I will tell you right now, more often than not, some sellers are going to show up at the double top. It's virtually a guarantee. Will it be enough to hold it down? That's the not guarantee part of it. However, it's rare that you come to a double top or bottom and you just explode. Does it happen? Absolutely. But more often than not, the break of a double top or double bottom is going to be something like this, where it's going to try to bounce. It's not really going to do it. You can just have your stop right down here. You're buying 26. 260, 230, your stop's just under here. You got 30 cents of risk. You're really looking for, well, 60 cents up. You actually have a halfway decent trade there. You're looking for about 60 cents up. But this type of failure is going to be much more common. Where people mess up is they start holding and then they see the bounce and they think they're good, but they're ignoring the fact that you've now broken the double bottom. And what was the double bottom has now quickly turned itself into a little double top that you don't want to try to hold for the buy back into there. And then ultimately, as I said, this is a trade I took today. I took this short here, viewing it as a little triple top opening range, all of that stuff. Do you include in that range trade reversal bounce out things like VWAP or hourly honey? Absolutely, but only if they're at the edges of the range. Not trading in the middle of a range, and when we're ranging, all of those things will be flat. That's a surefire way to say we are flat. Hourly 20 went nowhere today. 50 EMA, well, by end of day started moving, but hourly 20 VWAP and 50 EMA did nothing all day. So I don't want to be putting on trades there. If I get short, I want to target them. If I get long, I want to target them. That's what I want to use those for, more than anything else. And that's also for me. Hourly 20 is one I take entries off of. VWAP and 50 EMA for me are almost exclusively targets, more than entries. Oh, let's see. I didn't see a question from you earlier. So what do we got here? Oh, and they converge. So, I mean, we kind of saw it right here. So when they converge, because, like I said, and here's our trend here. When they converge, is where it gets a little bit tricky. You can see that ultimately they did try to defend the uptrend right here. I am still going to put the heaviest emphasis on the most recent trend. I will say, if I'm short here, I am trimming. Uh, I am trimming based on this trend right here. So it's going to be a target. Your pullback's going to be a target. And then it is ultimately going to become a little bit of additional confirmation to stick with that trade because it broke down, they tried to defend, and it ultimately broke right back down. So when they converge like this, if you're shorting into a trend is the main target, especially like this one. I mean, it's honestly surprising it did just get through here in basically one candle. I mean, ultimately it tried to bounce back up there. It's kind of surprising that it got through all of this junk just in one go, but it's just an example where it happened to. But generally, the most recent trend, you're writing it down to the more major trend of the day. That should be your target. When that more major trend of the day comes and it breaks, you can really start to say, okay, maybe I want to stick with this. One thing I should have made this disclaimer much earlier, because I said there's a bunch of trends around. You do not adjust trends. A trend is a trend because specific parameters showed up. And I mean, I even drew this one bad. So this trend starts here. It goes to here. So that is our trend. We don't want to draw this trend, you know? And then we're long, but we're like, oh, well, it might bounce. And then draw this trend and be like, oh, yeah, see it bounce. And then adjust our trend down to here and then move our trend up to here and then say, no, this is our trend. Because if you start adjusting trends, you start adjusting trend to fit your bias. I mean, this is even a great example here. You could do this one. There's reason to stop out of this trade, in my opinion. You caught a nice move. There's reason enough to get out of this trade. Well, you keep holding it and you keep breaking out. Well, maybe you draw the trend here and then it breaks your next trend or that trend and you just ignore it. And then maybe you move your trend to here and it ultimately works for you in the long run. Not a habit to do because we know when trends break, it can be a sign of reversal. So never adjust your trend. Draw your trend. When a new trend develops, then you can say, okay, here's our new trend. I'll ride that trend down. We start to consolidate a whole bunch. Market rejects, market sets a lower high. We again have a new trend here. Those are the kinds of things that we want to look for. And don't just start drawing them and adjusting them every single day. That's actually a funny, nice little bounce and rip right there. Don't start adjusting them all throughout the day. Draw your trends. Your trend is your trend because of specific parameters, so it has to stay there. Those are indicators there for exits. Do you use any for entries? No, not really. Hourly 20, I do use like a double bottom, double top at hourly 20. Love it. I mean, I jokingly call it the cheat code. It works too good. But no, I'm almost always going to use some sort of support or resistance level and then price action. I want the candles to tell me what to do more than anything else. Is there times where you're going to hit a level like this and you're going to reject perfectly? Absolutely. But more often than not, okay, well, the levels happen to be good on Apple. More often than not, you're going to have stuff like this. You like we just sliced that level. I mean, it worked earlier in the day, but we just sliced it. Well, this I bet most people, and understandably so, on this sell, were looking for a double bottom down to here. Well, when I see a nice reversal candle like this after a strong bearish trend and we have our first very strong bullish candle, I would feel very comfortable buying the next pullback right here and having my stop under here. The only thing that can tell me to do this is this candle, is the chart. And then where is our target? Our indicators. That's the best use of indicators, in my opinion. They, of course, can tell you, VWAP, we're above it. People long, generally speaking, are making money. And we're below it. People short, generally speaking, are making money. So they give you some information about the market, but we want to use that information as a target and say, okay, we've sold below here. We're likely going to bounce back to this hourly 20 because based on this hourly 20, once we are below it, we know based on the averages over the last day, longs have now gone underwater. So if we're going to bounce back to it, this is where longs have to defend. And ultimately, we can get a nice move above it or we can get a nice rejection off of it. But generally speaking, I'm going to be using those indicators for targets more than anything else. Don't get me wrong, you get a nice break above VWAP hourly 20, something like this with the pullback. I might buy that. There's times and places where they will be the entry, but more often than not, they're a target. Because like everybody tries to buy like pullbacks to the 9 EMA and stuff, and they just get wrecked left and right. It's just not a super effective method. How do I check for confirmation? What? I don't know what you mean by that. Oh, when it doesn't fill the double bottom, that's why I say analyze these candles. You are more than anything else. Let's see, was this just yesterday? You are more than anything else looking for who won. And we can see right here, bearish candles, weak little tiny bull candles, some wicks right here. We ultimately get ranging, but we get our breakdown candle, bearish candle closing near the low. They try to buy up to there, ultimately reject it. Bearish candle, bearish, bearish. All of this is bearish. Big wick here, can't even get outside of it, body in the middle. All of these candles are bearish until right here. And I'm not going to buy this one when it's red because I, like everybody else, would be saying, hey, the double bottom makes sense. Or maybe not the full double bottom, but somewhere down here, 263, nice whole number, some of these wicks, some of these bodies. Well, when I see this candle, all of a sudden I'm like, okay, sweet. Like buyers showed up. For the first time, buyers have showed up. I bet even if we could see my volume a little better, we probably could even see it. Let's see, a second. Yeah. So we can see dropping volume, dropping volume, dropping volume, nothing too exciting. All of a sudden, boom, big old green volume. I mean, we went from not very many shares to a lot of shares on solid buy volume. So we love this for a reversal. I know it doesn't look like, it's not a candle like this, but these candles I don't care about. I can't take an entry on these. These mean nothing for me unless I'm in there. This type of thing, I'm like, okay, this was very bearish. It has now turned very bullish. And it has done more important than anything else right here. It has defined our stop. That is what is the huge part of this. Al Brooks is going to call something like this a signal bar. it is signaling you to look for a trade. Al Brooks trades futures. So how he's going to trade this, he's actually going to put a buy stop a tick above the high of this candle. And you can see he's going to get filled at a bad fill, and this pullback is going to come. We as options traders, because entry is so crucial and Greeks are working for us or against us or things like that, uh, you 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 want to buy a pullback if you can. Because if we buy up here, we're buying 263.60, our stop is 263.20. So we got 40 cents of risk. Well, if we're buying this pullback somewhere down here, let's call it 263.40 for easy math. Now all of a sudden we've reduced our risk from 40 cents to 20 cents. So we've halved our risk. And we know we've added a little potential reward. And then ultimately, we treat it like any other trend trade or any other reversal trade. Look for breakout candles, move your stops up, look for breakout candles, move your stops up, do it repeatedly. This is one that happened to work spectacularly, not always going to work like that. But just look for the market to tell you what to do. That's all we can do. And then we use our targets that we have on the chart. Entry is just so important, and people really dramatically underestimate it in trading, unfortunately. Well, so on something, good question. And again, don't call them a hammer. They aren't hammers. They're just bullish candles. Don't yeah, thank you so much. Yeah, for anybody's got to get out of here. Thanks for being here. There's just a few of us left. Yeah, because you don't want to think of candles with a name. That's the thing. Like a Head and Shoulders, everybody looks for a breakdown bull flag. Everybody looks for a bull flag. It's not just a hammer. It is a hammer or it is a candle that what I want to see, my main things, if I'm looking for a bullish reversal candle, I want a bigger wick on the bottom than the top. I also want it closing above the midpoint. That one is just like it just so happens to be a perfect hammer. But they don't have to be like that. It's good when they are. I'm trying to find an example of something else that I would be like, oh, I'd buy that. Um, that's not a hammer, or I'd short that or something. Um, well, funny enough, this candle right here, um, small wick on the top, but bearish. I would be looking for a short on a break below here. I might even take this. It's unfortunate this big wick happened. Don't get me wrong. I'm assuming this was news, or maybe this is just one of those, fake wicks, phantom wicks, whatever you want to call them. I would take this short because I'd be looking at it basically high at the range. Not a lot of wick on the top, but I'd be looking for short somewhere here or a bounce to these highs. And this is the candle that's telling me that. Here's an example of one kind of a bullish candle. Could even make an argument it's a little bit hammery. Obviously needs a little bit more of a wick. But this is just something I wouldn't buy because I'm viewing it as basically an inside candle. We're pushing up into resistance. Not something I'd really be looking to buy, even though we're bouncing down here off at resistance. I just want to see one side winning in a big way. If it's got a wick like this, great. If it's more just like a solid bodied bearish candle or bullish candle, I'm happy with that too. I prefer it when one side is winning and ultimately loses because that's why we draw our trends on wicks. That's why we draw our ranges off of wicks, all of that. Because that's where one side is giving up. So that's what the wick tells us. But something like this, bullish candle. I ain't buying it because of everything we have right here. Very bullish candle, but because of everything we have right here, I'm not buying it. If this was down at the bottom of a trend, I might be buying it, but we always have to, what does the chart tell us? We want to see bears trying to take over at a spot we think they should take over, or we want to see bulls trying to take over at a spot we think they should take over. Nah. Just put money in futures. Just put money in futures. Top steps a waste. All those things are a waste. Total scam. Yeah, not a total scam, but they're a waste. Just you can put money in a futures account, Tradebait. You got $50 margin per micro. So you can basically be like, well, you really need like $100 in there, but if you put $100 in there, you can trade a micro and you can be wrong for, 15 points before you have any issues. Yeah, for sure, for sure. Okay, well, that's gonna do it. JT, how we doing? Unfortunately, ending right now. Thank you everybody so much, and we will catch you all tomorrow. Little Friday fun day. Have a great rest of your night, and we'll catch you later.